Good morning, everyone. Welcome to the first of our summer series. I'm Vivi. For those of you that don't know me, I'm the founder of Blackbullion. I will not be speaking today. You will all be delighted to know. I'm really excited to welcome Stacey Fox, who's going to give us a wave so everyone can see her in the squares. Stacey's from the SLC. Everybody probably knows some changes coming for the new academic year. This new cohort that we're going to be welcoming soon. She's been with the SLC for 4 years, doing funding information services, and basically knows everything, hopefully, that we all need to know. Hopefully, no pressure, Stacey, no pressure on you. This isn't a sales opportunity for us at all, but obviously, if you want to know more about Blackbullion, just drop us a message and we'd love to help you out. So with no further ado, Stacey Fox, the screen is yours. If anyone's got any questions, please do use the chat function and we will try to get to as many as we can at the end. Stacey, thank you as always for joining us. Over to you.
Thank you very much, Vivi. Bear with me, everybody. Just going to quickly share my screen and make sure that you can all access that. I'm conscious we've got a fair bit to go through over the next 30 minutes, so we'll try and power through as much as we can. So without further ado, as mentioned, my name is Stacey-May Fox. I work for the Funding Information Services team within SLC, and ultimately what that means is that we provide information and guidance around our policy and regulations to both England and Wales. So today I have been given a list of contents to discuss with you. Predominantly one of the things that I was asked to look at or explain are sort of the differences between SFE and SFW, which of course are Student Finance England and Student Finance Wales for the upcoming academic year. So we are going to take a look at the rates for both England and Wales. We're also going to look at the difference between repayments, as obviously we had the announcement from the government last year around some new repayment reforms for England, and there's been a slight tweak to the Ukraine policy changes. We're going to try and touch on the hardship form as well as childcare grants for those on non-course loans, and just give you some signposting for LLE. So we'll start off with the bread and butter, if you will. So first, the tuition fee. I'm not going to bore you all too much with tuition fee, because as I'm sure you're aware, it is exactly the same as it has been for the last 6 years. So there has been no changes, and just to summarise, that the maximum that universities that are offering full-time courses through an approved or fee cap provider with that access and participation plan in TEF award is going to remain at £9,250 for England and £9,000 for Wales. And there's also further information around accelerated degrees. Again, they're going to be capped at 11,100. However, with Wales, Welsh students who are taking an accelerated degree in England, they'll only get a fee loan of up to £9,250, and any additional shortfall must be met by the student. So again, similar to the last 6 years. And finally, part-time loans, again, are going to remain at 6,935 in England and 2,625 in Wales. So, like I say, just to reiterate, no changes there. 6 year in succession that those figures have been the same. So, the one that students generally tend to want to know about, maintenance loans, obviously they're for living costs. So we've had a slight increase as expected with England. So again, not going to bore you with all this too much, but I'm sure you're familiar with these tables. Obviously, the amount that the student will get in regards to maintenance will depend on where they are residing whilst they study, as well as their household income. So we've got our home rate, our elsewhere, and our elsewhere but outside of but inside of London rates. You'll then notice the column on the left with the household income. So those who are on £25,000 or under or are independent students will automatically receive the maximum. So the maximum for home rate this year is 8,400. The maximum for the elsewhere rate is going to be £9,978, and the maximum for studying in London is going to be 13,022. Again, I'm sure you're all very familiar with the setup of maintenance support, but obviously as the household increases, the amount available to the student will decrease in England. That is capped at 60,000 for home rate, so it doesn't matter if a student's household income is 60,000 or 120,000, those students will have the same amount of 3,698. If they're elsewhere, that's capped at a household income of 65k, and for study inside London, that's going to be capped at £70,040, which is a really random number, but it's what it is. So that is England. Again, Wales is slightly different in the sense that every student is eligible for a portion of maintenance grant from the Welsh Government. The main difference with SFW is that dependent on where the student is residing whilst they study, they will ultimately receive the same amount of money. So you'll see here the home rate, so living with parents, we've got the grand total of 9,950. So when household income comes to play, it ultimately determines how much grant the student is going to receive, which is then offset with the loan to give the student that total figure of 9,950. So again, I won't bore you too much with it, but we'll just run through a couple. So the minimum household income is slightly different or slightly less for Wales. So that is £18,370. So if we have a student who is residing at the parental home whilst they're studying, their household income is £18,370 or less, then that student will receive a grant, which obviously doesn't need to be paid back, for the amount of £6,885. That will then be offset with the loan of £3,065 to give the student the total of 9,950. If we then look at a household income of 45,000, in that instance, the student would receive a grant of £3,047. That would then be topped up with a loan of 6,903 to ensure that the student again is receiving that same total amount of 9,950. And you will just see similar setup with the elsewhere rate and the study in London rate, where the maximum will increase. So maximum for elsewhere for Wales this year is going to be £11,720, and the maximum for elsewhere in London is going to be £14,635. Okay, so that is the main difference with maintenance figures. A big change for us this year is around repayments. So we did have a couple of government announcements last year. It all kicked off with England, as it normally does, who confirmed that they're going to be introducing a new repayment threshold for new borrowers who are going to commence study from this upcoming academic year, so 23-24. The new threshold that has been introduced is £25,000. The government did confirm that they're going to maintain that threshold until April 2027. So ultimately, it's going to be in place until students finish their 3-year degree and are ready or eligible to start making repayments. And that from 2027, we're expecting that the threshold will increase in line with inflation. So similarly to the current plan too. So that was the announcement that we had. About 10 months later, the Welsh Government turned around and said that they are going to be maintaining Plan 2 thresholds for their students. So we do have now a difference with repayments between England and Wales. I have included a link on there. If you want to have a look at the ministerial statements, then please do. I am going to break down the differences for you. So we'll start off with the contingent Plan 2 basics. So this is the one that I'm expecting you all to be very familiar with. So ultimately, Plan 2 is going to remain applicable for continuing students within England, but for Wales, that will be both new and continuing students will remain on Plan 2. So just to remind you of what the sort of Plan 2 plan is ultimately that students will not start making repayments until their future income is over that threshold of £27,295 a year, and that's obviously the gross figure. I've also broke down the weekly and monthly equivalent in case you do speak to students that are planning on doing seasonal work after uni. If students study full-time, just a reminder that the April following completion of or withdrawal of the course is when we consider repayment period. So ultimately, student finishes in June. It's not until the following April that they are entering the repayment period. That doesn't necessarily mean that they will start making repayments at that stage, because ultimately they will not make repayments until they earn above that threshold. Once they are earning above 27,295, it's obviously 9% of anything above that figure, that ultimately we will claim back for their student loan repayment. So just to give you an example, student has graduated, now a graduate in employment, they are earning £30,000 a year. They can expect to make a monthly repayment of £20 towards their student loan. Plan 2 students will still have their write-off period 30 years after entering that repayment date, so that April following withdrawal or completion. And just a reminder that if the student's income drops below that threshold, then their repayments will also stop. Okay, so just to reiterate, this is going to be for SFE continuing students and also SFW students new and continuing. So the new plan, which has been introduced for new SFE students, so those students commencing courses from the 1st of August, those students will not start making their repayments now until their future income is over £25,000 a year. So ultimately, the threshold has been reduced somewhat for England. This new plan is known as Plan 5. Again, giving you the weekly or monthly equivalents there. Similar setup in regards to the fact that students still will not enter repayment period until the April following completion or withdrawal. But slightly different this year, as I mentioned in the first slide, that the government have announced that they are maintaining that figure, and ultimately we are not expecting these students to start making their repayments until April 2027. So that's regardless of if they decide to drop out earlier. Again, very similar in the sense that it's 9% over threshold that the students will repay back towards their student loan through the HMRC tax system. Again, if their income drops below the threshold, their repayments will stop. Another difference for Plan 5 is that the write-off period has changed. So now any outstanding loan balance will be written off 40 years after entering repayment. Okay. So the main difference is obviously now that the threshold is lower. We've used the same gross annual income figure as the Plan 2 slide. So if the student has graduated, is now in employment and earning money, if they are earning £30,000 a year, they can expect their monthly repayment to be around about £37. The last difference with the student loan repayment plans is the interest. So I always save this for last because this is my favourite slide to deliver. So at the moment, the Plan 2 loans, so the ones that you are all familiar with, you will notice that interest is calculated on the loan for the student in a tiered structure. So we've got these 4 little bubbles. Ultimately, whilst the student is studying, so as soon as they get paid those funds during the period of study until they enter repayment, the student's interest that is accrued is the retail price index plus 3%. So at the time of writing these slides, which I believe was tail end of last year, that was round about 5.6%. Okay. Once the student has graduated, they've entered their repayment stage, they are now earning an income, but they're earning below the threshold of 27,295. At that stage, they're only being charged the retail price index. So as I say, that figure at the time was 2.6%. Once they are earning above threshold, but up to £49,130, it is the RPI plus up to 3%. So that could be anywhere from sort of 2.6 up to 5.6. Then once they are earning over 49,130, it's similar to the first tier, and it's RPI plus 3%, so around about 5.6% interest. So my favourite thing about Plan 5 repayment loans is that they are no longer going to be tiered, and they are going to be set at RPI plus 0%. So it is purely the retail price index figure that they are going to be accumulating in interest. They're not going to have this extra plus 3 plus up to 3. So in a nutshell, it's almost halving the amount of interest that students are going to be paying on their loans. So I like to look at it as they're going to start making their repayments slightly sooner because that threshold is now 25,000. But the great thing is that they're not going to be accumulating as much interest as Plan 2. So the repayments they are making are going to be predominantly wiping off their balance rather than sort of the interest for the loan. So that is, in a nutshell, the repayment changes for SFE. And as I say, they are not applicable to Wells. So we're now going to quickly move on to the Ukraine policy changes. So again, I'm sure, yeah.
Stacey, sorry, it was me. I was just going to come in because we had a question from Nora, and just before we move on, I thought it might be best to just do that now. We had a question about the write-off and asking if the write-off rules still include if the student dies. And so is that still the case?
Yeah, sadly, I've experienced that very recently. So I've actually got the process written down. So yeah, if the student has sadly passed, I believe that we do need the original death certificate in order to write the entirety of the balance off, but that is still very much in play.
Okay, thank you.
Okay. So yes, Ukraine. So again, I am sure you are all familiar with the fact of the conflict of Ukraine and the fact that SLC did introduce the funding models for the Ukrainian schemes. So we had the policy changes introduced last academic year in 22-23. So this was to provide student funding and ultimately home fee status to the following groups. So we have the 3 Ukrainian schemes, the Ukraine Family Scheme, the Homes for Ukraine Sponsorship scheme, or the Ukraine Extension Scheme. So ultimately, any student who were granted one of those statuses were eligible for home fee status for student funding. I have included a link to the right, so I will obviously ensure that these slides are sent over and hopefully cascaded to you after. But I have provided the chapter on the eligibility guidance, which will take you through the information on Ukrainian schemes, as well as evidence. So the only real changes that we have had to this scheme, which was already put into place last year, is around family members and also the residency requirements. So the new introduction of eligible family members of somebody who is on one of those Ukraine schemes or on the ARAP or ARC sleeve, so that's like the Afghan relocation. So any students who are or family members of people who are on those schemes are now going to be eligible to apply for student funding and will also be eligible for home fee status. Okay, so it's literally just an extension to include family members of those on those schemes. This is only applicable in England. Wales have not yet made this change, so we are not 100% sure if they're going to roll it out, and if they do, when. again. So at the moment, I would only advise this change for England, but obviously we will keep you updated with our bulletins if Wales later decide to follow suit. There has also been a slight change around the residency requirements. So ultimately, we have amended the date of residency requirements to the day on which the first term of the first academic year actually begins. So you guys are probably very familiar with the whole first day of the first academic year. So we had lots of instances where students were arriving before the first day of their actual term date. But unfortunately, the way that the policy was written, we were obviously taking that official first day of the first academic term. So there's just really been a slight amendment to the regulations to show government intent. So what that means is that as long as the student is in the UK or in England before the day before they start the actual term, they are now going to be included within those regs. So it's no longer that actually first day of the first academic term, which is first day of the first academic year, which is effectively 3 weeks before your term starts. So it's really just a tidying up of that regulation. So needless to say, the rationale behind that decision is that we are aware that there's lots of students who arrive in the UK after the first day of the first academic year of that course, but before the start of the actual course. So this will now allow them to be eligible for supports. Okay, so just quickly
Stacey,
move on. Yeah.
Stacey, may I just go back one, just because from a context point of view, the last slide, Paula is asking, so that's not the 1st of September anymore, could be the 18th of September, or are you referring to those who start in January? We'll just do some of the specific questions so that they're in context.
So use it for the September date, because that's the one that ultimately will likely confuse people, because that is the start of the academic year. So it's no longer that 1st of September. If the student's course starts on the 19th, previously they would have to be there by the 31st of August. Now that student can be here on the 17th of September, as long as they are there prior to the first day of their actual course physically starting.
Perfect. Thank you. Paula, if you've got a follow on, just let us know. And Bronte asking, is this just for Ukraine or for all residency requirements?
This is just for Ukraine and Arab and ARC sleeve holders. Okay, so that's, like I say, the Afghan relocation scheme. And I think the other one, apologies, I can't remember what the acronym actually stands for, but it's another sort of Afghan settlement scheme. So it's the same for protection-based categories in England. So domestic violence, indefinite leave to remain, or bereaved partners. So that one is for protection-based categories, not everybody. But again, if you want to look into more detail to who exactly that applies to, you can have a look at that eligibility guidance link that I've sent, and you'll find a detailed sort of list there.
Terrific. Thank you very much. As always, guys, if there's any other questions, just pop them in. And I know there's a few other questions we haven't addressed. We'll address them at the end of the session. Thanks, Stacey. Over back to you.
No problem at all. I'm just conscious we've got about 4 minutes, so I'm just going to try and power through the last slides for you to make sure that we cover as much of the content as we can. So this one's fairly easy because I believe that you actually discussed the hardship form during your last session. So from my understanding, when my colleague Kev delivered a session around hardship, a lot of the information hadn't been publicised yet, so you'd been made aware of the fact that we had sort of condensed the 3 separate forms into one PDF. So there is now just one financial hardship form that students would need to complete. Just to remind you all that students would need to contact SLC or SFE in this instance proactively to explain that they are in hardship in order order for them to be sent the form. There has to be an element of contact. That hardship process must have been initiated before we can give the student the email addresses, which I've included at the bottom. So that is if they do want to talk about financial hardship, they can do so, with the financial hardship team. So we've got both SFW and SFE. So just a reminder that hardship, unfortunately, doesn't mean that students can get more maintenance support. It's actually to help students who are looking at overpayment, and as a result, their entitlement has been reduced. It may be for students who have suspended and want funding in order to sort of have that extension. If students have a scheduled payment that they've had brought forward, or if they've withdrawn from study and they've been awarded grants. So ultimately, the majority of it is more focused on managing the repayment element. It's certainly not an instance that if a student is as I say, in hardship, that there would be any more maintenance in the pot. Unfortunately, students get their entitlement for maintenance and that is it. So as I've mentioned, once the student has been in contact with the financial hardship team, so they've had that form come through, they can then engage with SFW or SFE directly using those email addresses. And again, I think Kev mentioned during the last session that there was some guidance that was due to go online on gov.uk, and I can confirm that that is now in the public domain, and that is available for you if you want to read more into the financial hardship guidance. Okay, so childcare grants, one of the other things that Lynn asked me to cover off, obviously we have instances where students will be doing a long course, so they'll have more weeks ultimately of their course than your standard typical course length. For students who are eligible for childcare grant, I know that they experience or tend to experience difficulties because of the way that our system is set up. It doesn't automatically sort of grant that additional childcare grant. So we do have a triage team that ultimately will make manual payments. So I just wanted to give you a little bit of an overview of how that works internally. So I have written here that student requests course extension with CCG on their account. That is more for students who have actively withdrawn. For those students who have transferred over, for example, you will find that the system will automatically sort of pick that up. But once we have the notification that the student ultimately is sort of doing a long course and they have CCG on their account, that application is passed internally to one of our grants for dependents triage teams. They determine whether or not we have that acceptable evidence. So in this instance, it would be information from the HEP, so the extended course date, the main reason for the extension, whether or not the student assessed access facilities, attended tutorials, or having meetings with mentors or support staff. So we need to make sure that you guys provide that on the COC. Once we've confirmed that we've got the acceptable evidence, the student is sent a bespoke CCG form. So that will obviously be tailored towards them and the information that they've provided. The student will then complete that childcare grant form and return it to the GFD triage team. They'll then calculate the eligible cost due to the student. They will then request that the manual payment is raised. The student will receive a notification of entitlement confirming their payment, and then payment will be made. Okay, so again, if you do have a student who is in that particular position, not sure what to do, you can either direct them straight through to SFE, or obviously your friendly funding information services account managers are on hand to help you on a case-by-case basis. Just quickly finish off with lifelong loan entitlement. So unfortunately, as I'm sure you were expecting, we still don't really have a lot of information that we can provide. all the information that we can discuss is already currently in the public domain, and I believe it's been out for a little while. So the link at the bottom will take you to the full consultation response. So that is sort of the biggest document of information that we've got available at the moment. I was asked to let you know that we are in the process of developing sort of the first draft of the frequently asked questions. So these have come from a combination of queries that we have received through our practitioner inboxes. They are currently with the Department for Education, so we're waiting on their approval and their responses. Once we've had that through, we will of course be getting them published. They're likely to be hosted on the LEP and HEP services website, but for those of you that are signed up to our bulletin, you will then receive a sort of comms letting you know that they are out and where you can find them. So if any of you guys are practitioners and aren't signed up to the bulletin, I would strongly encourage you to drop me your email address so that we can add you to the database. So again, if you do have any queries or there's anything that you want to raise about LLE, we can accept those. So either send them to your local FIS account manager. So I have included a very squat map, but a map nonetheless. And I have included all my colleagues who sit in my team and what areas we cover. So as I've mentioned, if you do have any questions about LLE, you can either directly contact your account manager, or alternatively, you can send it to our sort of team inbox, which is fundinginformation@slc.co.uk. We will then collate them and they will likely be sent round to the DFE for the secondary draft of frequently asked questions.